Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, May 28, 2015. Inside the numbers tonight, we're going to take a look at the SPY and the E-mini. And I say here we go because I think there's a big move on the way. We'll talk about that. Crude oil, gold, the bond market, US dollar. All of these should be movers tomorrow morning. We'll talk about that. And then the videos going forward. And what I wanted to mention on that topic is in a few days, the videos as you know them here, the daily analysis videos, are going to be moving over to the members area at mystrategicforecast.com. So I'm going to put out different types of videos, but in terms of the evening videos with the support and resistance levels of all the markets that I cover, those are going to be now for the members only. So if you want to watch those, come over to mystrategicforecast.com, check it out, sign up, become a member. You get a 2-week free trial. You'll see the same videos you're seeing. I think it's worth it. And now let's get into the markets and see what we've got. Okay, so this is a daily chart of the SPY, and we really didn't have anything happen today. It was more of a mundane day, and that normally happens, or a lot of the time it happens after a large move. It didn't happen after this large move because we had the reversal, but today we had nothing going on. And what does that tell us? Well, in and of itself, it doesn't tell us anything, but what I think is happening is here's what's about to unfold in my mind. Now, I'm going a little bit out of the limb because I'm going to have a lot of things that unfold tomorrow or begin tomorrow based on what I think is going to happen, but I have, some safeguards of when I know it's not going to happen. So let's kind of get into it and let's see what I'm thinking. So I'm going to switch over to the E-mini contract because when I talk about some numbers, I'm going to use those because they're where my calculations come from. So tomorrow is the release of the GDP numbers. And while we know that GDP is phony, there's no way they know what GDP is, it doesn't matter. It's all about how the market reacts to whatever the number is. We don't give a hoot about the number. It's a phony number, and either way you look at it, it's going to be a bad number because our economy is not growing. That's pretty much a known fact at this point. But what I think is happening, and you have to go back to money flows. Money is still flowing into stocks, okay? Even in light volume days, they have a tough time pushing the stock market down to any significant level, and that's that hand underneath the market I'm talking about. Now look what you had here. You had a low, a higher low, a higher low, a higher low, a higher low. Okay, so it's setting up for higher prices. I mean, this is bullish, okay? There's no doubt about it, this is bullish. I've showed you the weekly chart. I've showed you the monthly chart. There's nothing about these charts that are bearish. So I still think there's higher prices coming. And so tomorrow, when they interpret the news from GDP, what I think was one of the scenarios is the number's bad, and then everybody says, oh no, it's a bad number. The market probably takes a dip initially, but normally the first move is usually the wrong move. And what happens is everybody comes to terms with the fact that the Fed isn't going to raise interest rates anytime soon. They're just not. It doesn't matter what the reason is. It doesn't matter what the reason becomes. They're just not raising rates anytime soon. And even if they did, it's a quarter basis point, and whenever that occurs, that is absolute nonsense. So two things. Either a quarter point is finally deemed nonsense, or they're not going to raise rates anytime soon. There's going to be a continuation of the easy money policy from Japan, the US, Europe, ECB, and China for that matter. And that should send, again, equity prices higher, maybe gold and oil prices higher. The dollar maybe has some pressure downward. Remember, I told you that I wasn't convinced that the low was in the dollar, and we'll talk more about that when we get there. So this is what I see as a possible scenario unfolding tomorrow. Do I know that's going to happen? Of course not. So what we have to do is we have to use hard factual data and numbers to say, well, what happens if? So what happens if? Okay, so here's your line in the sand. Okay, I can tell you right now, in fact, I'm going to put it in, okay, because I have another number here, and we're going to say 2123, okay? 21.23, in fact, I'm going to do this. Watch this. And I don't do this often, and I don't take it lightly, okay? But when I make it a darker line, it's important, okay? So 21.23, if we rise above 21.23, and by the way, after GDP, between 8:30 and 9:30, we may just jump over that and take off to the upside if it's going to go up anyway. But anything above 21.23 hourly, and then obviously daily closes above that, is going to spell higher prices, significantly higher prices, okay? And on the downside, okay, this 21.15 is important, obviously. You've seen that be important numerous occasions, okay? So let's just see, how important that is. We get below it, fight it, fight it, fight it, got to come back above. How many times have you seen that? Let's look at the hourly chart, okay? 21.15, touch it, bust it, come back over it, touch it, back through, bust over it. So it's obviously important. But the more important number right now, at least for the next couple of days, okay, is going to be 21.12, okay? So 21.12, and then we're going to make this actually stand out a little bit also, because for the next couple of days, we're very, very interested in this line here and this line here, because any hourly close below 21.12 is bearish. Any hourly close above 21.23 is extremely bullish for higher prices, new highs, and beyond. So that's where we are. So the story that I told about what I think may happen doesn't really matter if you know the numbers, okay? All that was just to put a package around a story, but in reality, I'm looking at the numbers. I'm just watching the numbers. Above 21.23 is bullish, 21.12 is bearish. That's simple, okay? All right, so that being said, let me see what else I have in my notes here, if there's anything of significance. All right, so there you have it. Let's go to gold and check out the gold market. Gold hanging in. And this is 60-minute chart. Let's go back over to the daily chart for a second and take a snapshot of that. And gold's holding in. So, a lot of folks are thinking, is this a bottoming tail today? No, that's not what it is. It's just a narrow day. Nothing going on except for the fact that I've been saying for a couple days, I think there's higher prices coming in gold, and I think we're going to get back up to the this dark lavender line at 1205, 1206. And if that's the case, and the story I just told you pans out, and kind of all these things converge, I can certainly see where gold may take off beginning tomorrow into next week also. Maybe it gets it all done in one day. I don't know, but it's pretty simple. If gold is going to make the move, it should do it relatively soon. And in terms of where the downside would be, if you would be coming down into these areas here, it's off the table, and I think something else is developing. So below 1170, I don't like it. In fact, I wouldn't even like to give it that much room on the downside. But we're going to see how the next day or so pans out. If we begin or if we maintain some weakness, let's go to the intraday. See this? This is like an intraday reversal. Okay, if this fails, all right, meaning if we come back down and start to make new lows here below this candle here, the low of this candle was, I hate those pop-ups. Those are killing me. I still can't see it. It's amazing. Whatever this low is, it's about 1179, 1180. If gold came down below 1180, I think something else is developing. But this intraday reversal pattern should work out well. And let's look at it on the hourly. You see this reversal here. This was a down move with a reversal similar to the stock market, right? Doesn't that look the same as? Let's go over and check it out. Doesn't that look the same as the daily chart of the SPY? Let's go look at that. Down and then a reversal. Let's look at gold on the hourly. Okay, not the same because it's an hourly, but it still looks very, very similar. So, this is the kind of stuff where I say you let the charts tell you what to do. Right now, those two charts, reversal patterns aren't to be taken lightly. Reversal patterns are there for a reason. It's because the market reversed. So if the market reversed, there's higher prices coming more often than not. So I'm looking at a reversal pattern on the hourly in gold. I'm looking at a reversal pattern in the stock market on the daily, on the SPY or the S&P 500. So those are the kind of things. They are technical indicators, but you have to interpret them with something. In other words, this is a risk business, right? So there has to be a point in which you take your shot. And sometimes you take your shot on the long side, sometimes you take your shot on the short side. But remember, the trend is your friend, and if you're shorting this market, you're more apt to be guessing than not. Okay, you may have a good reason, or you think you have a good reason why to be on the short side of the market. But in reality, you have to ask yourself, what's the technical setup I'm short? Or just do I think the market's going to go down? If you think the market's going to go down, check this out. If you think the market's going to go down and you take a short position and you end up being right under conditions that would normally not be a down market, that's the worst thing that can happen to you. Why? Because you think you're smart and you actually got lucky. And I'm not saying you're not smart. I'm just saying I've done it. We've all done it. What happens is you get into this false sense of, oh, well, I was right because. No, you actually got lucky if the technical indicators weren't there and you went against the trend and against the grain and you just took a guess and ended up to be right. That can do you more financial harm over time than good. So you have to be careful about those things. All right, so I think higher prices are coming in gold. On the downside, you know it. On the upside, you know it. Let's move on. Oil. Similar routine in oil. I mean, you look at an hourly chart and you see an intraday reversal here, and we kind of stalled out around the 50-period moving average right here, but we closed above it, or we got above it. Did we close above it? Anyway, so the point is, yeah, we closed above it. So the point is we saw a reversal pattern in gold. We saw a reversal pattern in oil. Yesterday we saw a reversal in the stock market. You know, when three guys tell you you're drunk, go sit down, right? So we see three markets reverse, and to me, that means higher prices. Now, if I'm wrong and we have lower prices tomorrow, that's okay. I'm going by what the probabilities are. Right now, the probabilities are telling me higher prices are coming in gold, oil, and stocks. That's simple. Okay, so what numbers do we have in oil? Well, let's see. Well, nothing's really changed from what I told you yesterday. I think we're going to touch close to or right about $60 on this move. And if we zoom out, go to the daily chart, we'll see our, let's see, this is July. Do we want to be in July? Is it July or has oil switched over yet? I think oil switched. No, it's gold that switched over to August. Okay. So here what we have is the lower portion of the trend line. And what did I tell you last night? If oil got down to the lower portion of the trend line, I'd get interested. Well, I got interested. So we slightly went through the 50-period moving average, right? This upsloping blue trend line. And we came right up against, just touched it. No, we didn't touch it. We came within pennies away from, let's see, low was 56.51, and this line is at 56.22, 56.51. So we came within about 30 cents, and then we reversed. And when I say reversal, you know, let's look at the 10-minute and then the 60. So this is a reversal, right? So on one candle on a 10-minute chart, you took out these three of the down move. Okay, that's considered reversal and closed. Well, you didn't close above, but you closed above here. Then you're retraced, and watch this. I'll bet you this is a 618 retracement. Watch this. I can eyeball this stuff. Never changes. Okay, look at that. It never changes. It just happens over and over and over again. So if you're watching any market, a stock, a bond, oil, it doesn't matter. You make a low, and then you make a high, you can determine if the market is making a normal Fibonacci retracement, and this one was. Okay, so that being said, I think there's higher prices coming in oil. I think there may be as much as $2 on the upside coming in the price of crude oil. Back up towards, let's go back to the daily for a second, back up towards the middle part of the channel, the 20-period moving average, right here. That's what I think is going to happen over the next day or so. We'll see. Okay, bonds. TLT, not much doing today. Mainly just a day where the market just paused, which is not unusual. We've had a nice, solid up move, and now I think you're going to consolidate for a while for another up move, unless tomorrow sends the bond market higher and interest rates lower if a Fed if the GDP announcement is perceived dovish. Okay, so we'll have to see. I'm not going to guess one way or the other right now. You're in a bullish position in the bonds, but tomorrow may bring any direction one way or the other, depending on what GDP and how the market reacts to it. Okay, I think that's about it for tonight. Remember, these videos are going to stop. There's going to be different videos that are going to be less about price levels in terms of the major markets that I give you every day, and they're going to move over to mystrategicforecast.com. So come check it out. Sign up for a free trial, and you'll get the same videos you get now. I might put even a little more detail in, but I would imagine sometime next week, maybe June 1 would be a good cutoff when we're going to start that process. So thanks for tuning in, folks. I appreciate it. This is David Frost, mystrategicforecast.com. Another episode of Common Sense Market Analysis.